There's a big misunderstanding. The market is not the economy. That's just not how it is. Okay, the economy is actually doing pretty good right now. I know a lot of people don't want to hear that because they're like, that's not true. I'm not saying everything being done is good, but based on the way we measure our economy, it's still doing pretty good, especially when you compare it to the rest of the world. That being said, though, the market is not the economy. Well, Stocky, they're printing money like crazy. It's devaluing the dollar. Dollar devalue. Good for market, bad for economy. Why is that? Two reasons. The more the dollar's losing, the less people want to keep it in savings and they want to invest it and they want to make it outpace inflation or the devaluation of the dollar. More likely they are to invest it somewhere, so they put it in the market. Also good for companies because we just had a report coming out that the Mag 7, right? 49% of all of the Mag 7 revenue is now coming from overseas. So what does that mean? That means they're getting more sales overseas because it's a cheaper conversion. 65% or 62% of people in America, households in America now are invested in the stock market. That's very good for the market. That's actually slightly bad for the economy. That means money that they would otherwise be spending, they're investing. But that drives stock prices up. Retail traders bringing in $5 billion a day in inflows. Citadel's data showed that retail traders, their retail clients, 18 straight days of positive inflows. That means 18 consecutive days their retail account holders were net positive buyers of stocks and equities and options, everything like that. Good for the market, bad for the economy, right? Something that's bad for the economy can be good for the market. The market is not indicative of the economy. Politicians love to use the stock market as the look at the proof of the economy is doing so. That's not always true.